Dun, 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 dun. Oh, hey there, friends. Back for more S Corp smarts, I see. I'm Caleb with Gusto, and if you're watching this, you want to find out how an S corporation can save you money on taxes. I promise, no more stalling. We're getting right into it. So let's proceed, shall we? There are two ways that an S Corp can save you money on taxes. Number one, the Internal Revenue Service, IRS for short, says that owners of S Corps are required to pay themselves a reasonable salary as an employee of the company. This means that your wages are subject to payroll taxes, and the S Corp must also pay employer payroll taxes. Now, I know what you're thinking. I thought you said I was going to save money on taxes, not pay more. I did say that, but just sit tight. We're getting there. Now, when you're paid a salary via payroll, a couple things happen. Your taxes are taken directly out of your paycheck. So instead of getting a giant tax bill at the end of the year, it's pay as you go. In other words, your taxes are deducted every time you get paid. That is way easier, people. Likewise, your S Corp pays for its share of payroll taxes throughout the year too, instead of footing the entire bill all at once. Again, it's way easier than having a hefty bill at the end of the year. Those wages and payroll taxes are an expense for your business. That means it reduces your overall profit, and because you have to pay tax on that profit, less profit means you pay less tax. Got it? Good. The second way an S Corp can save you money on taxes is your profit is not taxed as self-employment income. Now, if you've ever operated your business as a sole proprietor or single member limited liability company, you're very excited right now because this means you will not be paying the 15.3% self-employment tax on your profits. Instead, you only pay payroll taxes on the salary you pay yourself from the S Corp and your S Corp share of Social Security and Medicare payroll taxes. What do you say we look at a simple example to help illustrate those savings? Let's say you own a consulting firm and make $150,000 in revenue and have $50,000 in expenses. If you're organized as a sole proprietorship, the numbers are going to break down like this. Okay, there's your total tax for a sole proprietorship. Now, let's look at an S Corp example, assuming everything is the same, but also the reasonable salary of $50,000.
Okay, your tax savings between a sole proprietorship and an S corporation are about $5,340.
Now, before we move on, it's very important for you to know that this example is very simple and shouldn't be taken as actual tax advice. Your actual results could be very different depending on your circumstances. You should definitely consult with a tax professional before you do anything, and I mean anything. So there you go. That's an example how an S Corp can save you a bunch of money in taxes. But just don't drop everything and rush to start one. Check out the next video for more critical things to consider when you're thinking about an S Corp. All right? Okay. I'm Caleb Newquist. Thanks for watching.